Welcome to the News and Views podcast by the FinTech Times. Established in 2016, the FinTech Times is a global multimedia news outlet centered around the world's first leading FinTech newspaper. We report on the latest and brightest ideas from the FinTech world. Follow the conversation using hashtag TFT News and Views and follow us at the FinTech Times.
Hi, I'm Polly Jean Harrison, features editor at the FinTech Times.
Hi, I'm Tyler Smith, and I'm a journalist at the FinTech Times.
Hello, and welcome back yet again to another episode of the FinTech Times News and Views podcast. I am here with just Tyler this week. Unfortunately, Francis is not feeling very well, so he won't be joining us. But Tyler, how are you doing?
I'm here, I'm back. I'm doing really well today, Polly. Thanks. It's been a really busy week, super busy week, especially as I gear up to go to Saudi Arabia on Sunday. It's all been confirmed now. I'm attending LEAP next week, so yeah, it should be super fun.
So it'll be an even busier week for you next week, I imagine, being in Saudi.
Yeah, I'm just sort of finalizing my last few interviews, but yeah, it's looking lively, and I've been told that there's going to be a few people that we know already out there, so that's going to be really good to see them. How was your week anyway?
No, my week has been pretty good as well. Like you say, a bit hectic, a bit busy. Glad it's coming to an end. Looking forward to the weekend, I think, and just having a bit of a chill one. But I mean, we're into February now, right? January flew by, and now here we are in February, and it's still everything's all just all a go in fintech. So I mean, what are you going to be talking about today?
Well, today I'm going to be talking about a new article that we've just finished from Bitcoin Suisse, and it's joined the Liquid Collective. So we're going to be sort of diving a little bit into Ethereum and liquid staking, which is really cool. So yeah, quite a topic. What are you going to be talking about?
Yeah, awesome. I'm going to be looking at retail banking, particularly in South Africa, after a new report came out on the industry there. So two very different topics, but I think will be good. Good chat this week.
Thanks, Polly. Well, yes, as I was just mentioning in the intro, this is about the Liquid Collective and the recent addition of Bitcoin Suisse to its membership. So Bitcoin Suisse is a Swiss cryptocurrency firm based in Switzerland, and it's joined the Liquid Collective, which is like a liquid staking protocol. And it was sort of developed and founded by a series of Web3 and DeFi companies. So really super cool. It's very complex. When I first came across this lead, I was a bit like, oh gosh, I'm in deep water now. But essentially, to understand what's going on here, we have to sort of look at how blockchains are usually secured. If we look at Bitcoin, many people will be familiar with Bitcoin's proof of work mechanism that it uses to sort of like validate transactions, create new blocks, and secure the blockchain in general. Now, basically what proof of work is it depends on like computing power, and users must validate their new blocks with their own computing power. They must mine their own cryptocurrency to establish the legitimacy of transactions. Of course, as we've mentioned on this podcast a lot before, this process of proof of work is very energy intensive. And for this reason, Ethereum, which is sort of the focus of the article here, switched to an alternative mechanism last year called proof of stake. Now, what proof of stake is it's like a voting system. So you have people called validators, users called validators, and essentially what they do is they stake their Ethereum behind a block. So they're almost like voting for blocks that they think are legitimate. When they stake Ethereum in this way, it becomes locked, so you can't trade it, you can't use it in any way, you can't move it. It sort of becomes locked behind the block that they voted on. Now, to become a validator, it does take 32 Ethereum coins. I'm not really too sure about what the onboarding process inside the blockchain looks like in that regard, but just to sort of move away from that, the Liquid Collective, where it's concerned, is within this sort of staking process within Ethereum. So essentially what the Liquid Collective does is it allows people users to make stakes in the Ethereum blockchain, and it gives them a receipt that can be used in DeFi or Web3 projects. And essentially, it allows users to earn rewards for staking their Ethereum while also allowing the capital to remain its liquidity, which is why it refers to the term liquid staking. Bitcoin Suisse is one of the first integrators to move into the Liquid Collective, and it will open out the liquid staking market in Switzerland, which is really, really exciting. What was really poignant here in this article is that it talked a lot about the associated volatility with the crypto market, and how a lot of people have sort of maybe lost faith in the technology in some ways. And it was sort of like, well, it's so volatile, how are we ever going to make any sort of income off of it? Well, this is sort of like an alternative way that you can do that. And the thing is with Ethereum is that it's also less energy intensive, but also less scalable than proof of work that Bitcoin uses. But it does sort of ensure a way to create new blocks and secure the foundation of the Ethereum blockchain while allowing users to make rewards. So it's a very sort of like complex concept in how blockchains actually work. And I would encourage people to sort of go and read the full article, because we probably can't discuss all of it here, and we've got some really fantastic insights on the article. But Polly, I was just wondering, do you think this sort of thing should be more widely adopted in A, securing the blockchain, and B, maybe moving its sort of reputation away from something that's extremely volatile to something that can actually be used as like an investment, wealth generating tool?
Yeah, absolutely. And I think, I mean, you'll have to forgive me because when it comes to like blockchain and crypto, these things just do go over my head a little bit. So if I start gibbering nonsense, I do apologize. But no, I think moving to sort of proof of stake and liquid staking can only be a positive, at least from my perspective, purely because, like you say, with the volatility, but also just the sheer amount of energy that it takes to validate a transaction and add new blocks to the blockchain. That's it's a lot, and it's something that we see time and time again, how much energy these things take, and how many trees you need to plant in order to offset the emissions and things like that. So to have a situation where people can still get their cryptocurrency mined, etc., and be using proof of stake and liquid staking, I think can only be a positive. And especially obviously liquid staking being the focus of the article, to be able to take your token and receive a receipt for that token just seems to make a lot of sense to me. I'm sure there are some people who don't like that sort of thing, because if am I right in thinking that it's a little bit more centralized if you do liquid staking, like there's a bit more of an oversight, which I know people like using cryptocurrency because it's so decentralized and because there's no oversight in that respect. But I feel like just in terms of sort of security and performance, surely staking in this way is a really positive thing, at least from what I can see of the situation. And I guess, like you're saying about the volatility, it's something that I'm always a bit thingy about. I'm always a bit sort of not wary, that's the wrong kind of word, but when it comes to using cryptocurrency, I feel like there's cryptocurrency as like an investment, and then cryptocurrency as a currency, and those are two very different things, even though they are the same. It's still cryptocurrency, but the way you use it is can be very different. And of course, the volatility affecting crypto as an investment, well, you just say that's the way of the market and that's the risk you put in it, whereas cryptocurrency affecting the volatility of a currency, that's got a little bit more issues there. But just in general, I know the market is really having a moment at the moment, for want of a better phrase, with all this like crypto winter and things like that. So maybe taking a little bit of the volatility out of the equation actually could promote things for the better and actually get the market to be in a slightly better standing. At least I think it would definitely generate a lot more interest in cryptocurrency, because I know if you are sort of well informed about the whole thing, I think you are put off by the fact that it is volatile and you can lose all of your investments very quickly and things like that. So I think it's an interesting situation, and I wonder if more tokens and other currencies will be going onto the sort of liquid staking model in the future.
Yes, absolutely. I think it over liquid staking sort of does really well to overcome the problems that you highlighted in the proof of stake mechanism. Is that what it also highlights is when you stake Ethereum, there's like an unbonding and bonding period. So even if you want to unbond it, there's still like a process of a couple of days or maybe even a few hours to do that. And I think that sort of overcomes that aspect of it. As you did touch upon the centralized nature of this process, it does sort of rely heavily on anybody who has the most Ethereum. If I had half of the world's Ethereum, I could completely decide in which direction the blockchain went, right? So yeah, there is that aspect to it, but I think that the Swiss market will be open to adopting this. I think that there is enough interest within Europe as a region in general. There is enough interest to sort of maybe start driving this process forward. And of course, I think on sort of like the DeFi and the Web3 front, I mean that's really coming forward now, and I think that that association that the collective has with that industry, I mean, you know, it was founded by the community itself. I think that will also do a lot to sort of like drive that aspect forward. So we've got a lot happening here, and it is very exciting. But in terms of the centralized nature, I think you'd have to have quite a lot of stakes in order for that to come to fruition.
Yeah, I think it's just one of those. It's just one of those things, right? That you kind of have to just watch the market and see how it plays out, and just go from there.
Yeah. Anyway, well, we could talk all day about this, but what do you got on the books for us today, Polly?
Yeah, sure. So a bit of a U-turn from liquid staking and cryptocurrency. But I wanted to talk about a new report that has recently been released from the Boston Consulting Group, all about the banking industry in South Africa. So essentially, uh, it kind of concluded that retail banking very much needs to evolve in order to survive pressures from challengers in the industry. So obviously, COVID-19 very drastically changed how consumers view and want to interact with their banks. But I feel, as we've said before, there was already that appetite before COVID-19 happened, but COVID really pushed things along. Another report from BCG in partnership with Discovery Bank found how 80% of South African customers would prefer to do their day-to-day banking digitally, while 60% would be comfortable using a completely digital bank. So with the importance of digital offerings really sort of hammered home throughout the pandemic and now as well, it's obviously becoming a little bit difficult for traditional banks to really keep up with the offerings of newer challenger banks. And so, especially when we think about sort of personalization and tailored banking services, challenger banks are really starting to lead the way. So it was interesting from the Boston Consulting Group. The managing director of the group was sort of saying how retail banks are in a competitive starting position but need to adapt. And it's this adaptation that is really important for their future survival. So they benefit from high levels of consumer trust, obviously, and strong brand awareness, as well as skilled, long-standing staff in general. And this can play a really important role in an omni-channel customer relationship. But without change, these incumbents really start to be in a bit of hot water, really, and face separation from customer touch points, as well as start losing access to customers and their valuable data in the process. So the BCG report really found that traditional banks might find it difficult to reposition themselves to meet these new digital expectations. Whereas a challenger bank, obviously, they're all in place already to offer these digital options. So it was an interesting read, really. And I think the general thought, which is a thought that we've seen time and time again, is collaboration, and collaboration is the way forward to start moving the industry forward. Because obviously, challenger banks have the digital options ready, they have the sort of agile uh, behavior that they can sort of get things to the market quicker. However, banks still hold the large customer bases and that consumer trust, which is very important. So the banking landscape may very well lend itself to collaboration between traditional and challenger banks in order to sort of help the end customer experience and meet those requirements. And then sort of without doing that, obviously the digital newcomers and other people are, ready to sort of take customers away from the traditional banks. So that was a lot of information. But Tyler, what do you think about this? I know sort of competing versus collaboration and things like that is something that we've spoke about a lot at the FinTech Times over the past couple of years, specifically when thinking about banking. But what do you think? Is it a world of collaboration or what? Is it all about just trying to compete for the customer attention?
I think that, we have spoken a lot about sort of this co-opetition word and collaboration between the challengers and the incumbents. I think personally that there always needs to be this sort of level of competition within the market. You need to have competitors in order to have the drive to improve yourself, right? But I think in terms of abilities and the sort of interchange of capabilities is really really important between this sort of challenger and incumbent relationship. If we look at later on in the article, it talks about the use of data and how that's become sort of increasingly important to consumers. It really reminded me of the Behind the Idea that we published this week with Bankify, that really sort of talked a lot about this relationship between consumers and banks, and especially this is a little bit more in business banking with Bankify, but it did speak about this need to better manage data, and this was actually something that was brought to light throughout the last year. In fact, in the way that we had findings of NetApp, for example, that found that 60% of consumers didn't trust banks with their data. And I think that it goes on to talk about the use of AI models in analysis of consumer data and in the provision of banking services. And I think that that really is something that the relationship between challengers and incumbents should seek to solve, is this sort of use and safeguarding of consumer data. I don't think that there's going to be a massive shift to challengers anytime soon. If anything, I think that people are falling back on the incumbent banks that they trust, even though these challenges with their data persist. But I would really urge anybody really working in the banking industry to utilize their consumer data to the best of its ability to really reap the benefits in the services that they provide.
Yeah, I completely agree, and I agree with everything that you just said, and it's just one of those things, right? That fintech and these challenges are always going to be there to sort of try and take the customers, but then that's the joy of fintech, right? It's about encouraging that competition, but yeah, there is room for working together for sure, and it's a topic that we always seem to come back to, right? Like this isn't the first time we've spoken about it, and I doubt it'll be the last time we've spoken about it. So it will be really interesting to see how things sort of play out from a banking perspective, because it's been sort of we've been having this conversation for 2-3 years now. So is it ever going to get to a point where things kind of sort of resolve themselves, or is it just going to be an ongoing thing? So that's a really interesting one to think about. But no, I mean, that brings us to the end of our stories today. Obviously, a brief one since Francis isn't here, but thank you, Tyler, for bringing your story and your discussion. If you want to hear any more about anything we've talked about today, or you just want to know more about the fintech industry as a whole, head on over to the FinTech Times, where you can read all sorts of news and insights all about the fintech industry, all right there online. But why don't we move very swiftly on to what I learned this week? So each week we learn so much new information being on the editorial team. So much stuff, news and insights about fintech crosses our desks all the time. So we thought it'd be fun to share that with our listeners. So Tyler, what did you learn this week?
Well, Polly, this week we were looking at the FCA's January review of its consumer duty deadline, which is the 31st of July this year, and it really wasn't good. They found that a lot of people who the consumer duty will apply to really aren't that prepared for this deadline to come. And again, it talked about the underutilization of data in that preparedness. So yeah, we've come back to data again, full circle. But yeah, the January review of the consumer duty, really, really worth a read. What did you learn this week, Polly?
Yeah, that's really interesting for sure. So I learned all about the Isle of Man's Intratech scene. So I was at the Isle of Man last week for their Intratech Accelerator demo day, and I was learning all about how lucrative their insurance industry is, and their insurance industry, particularly life insurance, represents 22.4% of the island's GDP. So I thought that was quite interesting because it probably quite unexpected for such a small little island. But anyway, Tyler, thank you so much for joining me once again on this podcast. It's been fabulous to chat to you. We don't need Francis. I don't know.
We don't need
You know,
Francis.
he doesn't need to come back. That's just it.
No,
You know.
no, he's cancelled.
Yeah. But no, thank you so much. And I'll catch you on the next one.
Oh, I'll catch you next time. Thanks, Polly.
Thanks for listening to the News and Views podcast by the FinTech Times. Don't miss next week's episode and continue the conversations using hashtag TFT News and Views and follow us at the FinTech Times.